I am here with Sarah Makhomet. Makhomet, is that how you say it, Sarah?
That's perfect, Sam. Thank you so much.
Makhomet, from Dominion. So Makhomet and Agostino Mortgage Group, home ownership made easy. So today we're going to have a lot of great discussion around the shift. Should you be buying now, refinancing? Sarah, tell us a little bit about yourself, your team, what you do, and then we'll go from there.
Sure. Thank you so much, Sam, first of all, for having us today. I really appreciate it. So Rhiannon and myself are a team of mortgage brokers who have been operating. So I've been in mortgages for over 15 years now, and we've helped, thousands and thousands of clients over the years to refinance or purchase a new property, buy rental properties, and just build wealth through real estate. That has been our focus. We help a lot of women, being two females as well as couples and men. I mean, it's new immigrants. We focus on a lot of new immigrants coming into Canada. We focus also on a lot of self-employed clients, or maybe clients who have challenged credit. So you've gone through bankruptcy, consumer proposal, where the banks say no. We have options for those people to get into real estate. And that has been a focus, is to help people get into real estate. We always solution focused. When they have a challenge, we find solutions for the challenge to help, every client basically have a home and have, build their wealth through real estate.
Awesome. And what are you finding the biggest challenges for people right now? Let's say they're a little bit over leveraged, or they have things that they need to pay. They're not thinking about real estate. What's the biggest challenge you're finding out right now? And how are you kind of approaching that with your clients?
I mean, I think that at the moment right now, everybody's seeing the rates are going up. I'm the person who does not like to speak about rates, because at the end of the day, most people focus, what is my monthly payment? Can I afford it? But we were seeing right now, rates have gone up. We've seen prime going up 50%, about 50 beeps not too long ago. Prime is at 3.7. So it is higher, considering where we started, 3-4 months ago. But so there, the thing that I want to say, that even though we're seeing rates are being higher, we're seeing slowdown in the market from bidding wars. Some areas we're still seeing bidding wars, depending, the price points, but a lot more inventory as well on the market. So, we have maybe challenges with rates, but we have, some prices started to come down already. So the homes are not as pricey as they used to be. Also not the same level of bidding wars, so we don't have to worry about every client going with no, we have basically no conditions. People are worried, do I get a mortgage? So right now we have a little bit more sanity, I would say, in the market. We had a bit of insanity January and February and everything going on. So it is a good time to make sound financial decisions. That's what I would say.
Excellent.
That's what I'm seeing.
And at what point is someone, I spoke with another real estate investor, and they said, it's good to leverage, just not be over leveraged. At what point do you feel that someone's over leveraged and they should really look at taking care of things first before they look at buying another property, or et cetera?
Well, I always look at, say, well, it all depends on your cash flow. Like, where is your cash flow? Can you manage your payments? And do you have, some money saved for it, or a line of credit? Because, that's important. Things do happen. We've seen COVID. I'm Ukrainian. We see war in Ukraine. A lot of things are happening in the world, and there is a lot of uncertainty today, more than ever, perhaps, especially with Canadians who had a fairly sound, up real estate. Now we're seeing a lot of uncertainty. But having said that, in markets such as this, a lot more opportunities for investors. So if you have equity in your home, it's probably, a great time to take equity out of your home through a line of credit or a refinancing, and then be able to probably put it into real estate. I mean, lots and lots of wealth has been made through real estate. We do understand nobody's making more land. So it is, there is, so to speak, shortage of that. And a lot of money has been made through real estate in Canada. We've had, beautiful abilities to buy, because all kinds of programs in the markets. When I started 15 years ago, we used to have 0 down, 40-year amortizations, and people could literally pay their first-time buyer credit. So you could buy a property in Toronto for probably, 150, 200,000 15 years ago with literally $2,000. Like, most of the people were graduating who did not have debt. I remember speaking to students, and they were getting jobs. And I would say to them, do you know you can buy, like, 6 months into your job, you can buy a property? And a lot of them did not know about it. But many of my clients started with that. They were in their mid-20s. They had $2,000 in their pocket, and they were buying condos that we know where, there is no more condo that you can buy for, $150,000 in Toronto. But that's how they made a lot of money. Today, a lot of those people have a lot of equity in their home because they bought their townhomes and then they bought their Sammys and their detached home 15 years later. So, they've gotten all these beautiful homes. And so now they're focusing on, okay, can I actually take some of this equity and buy, real estate? Because we have seen such a high rise in such demand for real estate. Now, having said that, we know the numbers still there. There is still shortage of real estate. The immigration is coming. I'm Ukrainian. I'm now working with people who are coming into Canada. They are getting 3-year working visas. And the first thing they know and they need is a place to live. Would it be a rental? Some of them coming with money, but majority not. Like they'll be renting. They'll be our tenants, right? Until they get themselves set up and everything else. So I definitely think that there are lots and lots of amazing opportunities for people who are looking to make sound financial decisions.
That's a great point. Yeah, you're right. I mean, 1.2 months of inventory here. And so, I mean, less than 5 is a seller's market. There's still not enough homes. People are moving from more expensive markets. I think it is a great time to buy. In using equity and mobilizing equity, what does your team do as far as helping create a consultative approach to understand what their goals are, maybe to financially get to another place, maybe pay off for their kids' education or, retire early or whatever the goal is. What does your team do to kind of help them do that? And real estate, why is it so important to use real estate as a vehicle?
That's a great question, Sam. So many of my clients have bought, for instance, condominiums. The parents had equity in their homes. They said, I have 2 children growing, I'll buy 2 condos. And so I'll rent them out. And, especially if they're little, in 20 years, when it's time for them to go to university, a lot of that will be paid off. There'll be a lot of equity. I can refinance, I can do a line of credit. And I can just collect because my mortgage is predominantly paid off, right? So real estate has become a vehicle where people can put their children through, through a university, college. And then also at the end of it all, there will be an asset they can give to them, right? And another one is a vehicle for their retirement. So we're not sure what's going to be with pensions, a lot of uncertainty there. But real estate is real estate. Again, you pay it down 20 years, 25 years, depending on amortization. You get yourself set up and then you just collect in rental income. So you can live anywhere in the world and you can basically have ability to generate, some of your pension for your retirement or whatever it is. So we've used that and we guide our clients. If you're looking to take out some equity, especially now when the markets come down a little bit. And if the real estate prices were to drop a bit more, which we're predicting, nobody knows for sure, but it is definitely a good time to refinance, take some of that money through a line of credit or through, just equity out if you're looking to do that. It's probably one of the best times to do it. Let's say if you're looking to take equity out of your home, you should probably do it now because the property value could be, less a month from now, could be, we just don't know. But you might have opportunities ready to sit with cash when the time comes to be able to buy something.
Yeah, I think that's a great point. And to your point as well, like it seems like the people who took action, even if they paid $10,000 more back then, it was still a great decision for them to go ahead and get that property. It created a kind of a momentum for them to get another property, help their kids out.
For sure.
And use that. And a lot of people are doing that rather than, there's not as much faith in the banking system, putting that money in the RESP. Are they going to have access to it? Are they going to have access to those funds? So I think that's a huge idea as far as having an asset at the end of it that their kids have. And, whether you're making your kids either landlords or renters and giving them that ability for them to be landlords, I think is a huge, huge point. So your team, I know that you work with Agostino and yourself, and you have a group, Dominion Lending. So where do you usually focus and what kind of clients do you usually work with and where can people reach you as well? Let's start there as well. I think that'd be good.
We work across Canada, Sam, to be honest with you. We are located in Ontario. I know Rhiannon lives in Newmarket. I live in Toronto, but most of our clients, majority are in Ontario and majority are Ontario clients. Mm-hmm. But if somebody needs a mortgage in Canada, we can certainly help. We do not work in the States. People ask me all the time, do you work across the border? We don't. We've taken a lot of equity, help people refinance their homes in here and then buy homes in Florida, buy homes in Arizona. We've been doing this for the past 15 years. But we don't do mortgages across. We're not licensed to do that. But anywhere in Canada, if people looking to relocate, we have a beautiful network and we can definitely help them, qualify for mortgages. And as I said, our focus is new immigrants. Our focus is people who are self-employed, which is a growing number of people. A lot more people are becoming self-employed these days, and also people who have challenge credit. Like if you have a challenge credit, or if you are an investor and you specialize in investing in real estate, you buy multiple properties, then we are the people to speak to, because we'll help you strategize, we'll help you put it together, we'll help put a strategy in the future. So if you say, I want to buy one property for my son and another property for my daughter, when we qualify you, we will look into that. We will see a lender, because some lenders say, I don't want more than this many homes. So we make sure we put you in a lender where, okay, if they want less, we'll put you with this lender, because some lender might be able to allow you to buy more properties. So we want to know all of that across the board, which lender, which bank, or monoline lender, whatever it is, that would be a best fit for you. And people ask me, monoline lenders, trusts, banks. I mean, I tell you, at the end of the day, it doesn't really matter. It comes down to more on IRDs. Like if you take a fixed rate mortgages, there is a bit of a difference. The penalties tend to be a little bit higher when you go with the banks. That's just the reality of it. I've been, doing it 15 years, and depending. I mean, rates have gone up a little bit. Some people have lower rates. Now the rates are a little bit higher. Maybe we may not see the same IRDs as we have seen before. Interest rate differential may be, lower, because in the past we had higher interest rates and everything was going down, so the penalties were higher. Now the banks probably be happy if you get out of your mortgages and take a higher interest rate, right? But if you're taking a 3-year variable mortgage, which is today still for high ratio is like 2.7 prime minus 1, it is still a great rate. So I tell a lot of our clients, predictions are hopefully we do see inflation, and that's how we kind of seem to be battling that with higher interest rates. But because I believe Canadian real estate economy, overall is such a big market, hopefully, we'll see a slowdown in real estate, in interest rates. Hopefully we're not going to see such significant increases. We shall see what happens, right, with real estate and all that. But certainly if you have cash in the bank, you refinance, you take it equity, this is a great time to be doing that.
Yeah, especially when the home values are more. And if someone is buying a more expensive home, they can get better buying power to get that type of home for their family.
Sure.
And sell something right now where the market is good. What would you say maybe two reasons why people should be buying, even if the market is shifting and there's not as many buyers out there? People should be looking at maybe buying right now or investing in real estate when people might be thinking not to do it right now.
You know what I would say? I would definitely say it's a good time to do, because what I tell people, that I've been 15 years in the business, and what I found too is we had a few blips in the market. We had, let's say 2018, we've had, we've had that. And then I remember when I sort of started, more or less, we had the crash, in August, stock market, COVID hit. So we had a few of those. But what I've learned is that they never last. So we see this sort of a slowdown, people panic, rates are going up. But then market becomes crazy again, and it becomes super hot, and you're back in bidding wars. So it's like, people say you can never catch a falling knife. So that's what people say to me, I'm going to time the market. And I say, well, I don't know anybody who can really perfectly time the market. I just don't know that person, people who are the savviest of it in the market. But if you prepared and you're sitting with cash, or, you have a line of credit you can access to, when you see the right opportunity, you act on it. Even if the market drops a little bit more, but hey, the market might be started back to being, crazy, and you in bidding wars too. Like it could go either way. We don't know. I would tell you one thing for sure. We have lots of people with pre-approvals who are sitting to see what's going to happen in the market. We're now starting to say, okay, I'm going to slowly see what happens and go out there. But if the market becomes, overheated, we will be seeing so many people back in the market buying, because everybody's kind of waiting to see what happens. And we are sitting with many, many spring pre-approvals. And so you are one of those people. So that's the thing, you want to be a little bit ahead of the crowd, so to speak, ready. When opportunity comes, you act on it.
I agree. 2017, we always let our clients know the same thing. Like we saw that bit of a dip, and yet the next valley will be higher than this valley right now. So
correct, for sure.
There will still be more trend wise, and there's less people that are competing. And by the time it starts going up, that's when it's going to be that heated market again. So you really won't know until the next time. So and the news and everything is more global. It's more fear-based versus hyper local, and just information, great information about real estate, like you said too, it's the markets. So where can people reach you, and what are some last words that you have for maybe our audience, and people that are watching, that are thinking about refinancing, they're looking at expanding their goals, getting more real estate, things like that?
I would say, I mean, I tell you this. So now it's interesting that texting has become the new way of getting a hold of us. Like before, people would call me more or less, but it
Mhm.
seems, I would say that a big part of our clients, everybody's texting now. I mean, I think millennial, that has become so I'll usually say, I'll give my cell number and you can text me. And that seems to be one of the best ways to get a hold of us. But I mean, you can obviously call us, you can email us, but I will give
Yeah.
my cell number, which is 647-892-4437. And if you want to, reach out by phone call or by text, say hello, heard you speaking, interested in reaching out, please do that. And I think part of it became because people on Zoom calls, and so it's easy. They cannot be speaking on the phone, but they can message somebody while they are maybe on, a long conference call or something like that. So they're like, well, I'm doing this, I'm going to text, my mortgage broker and ask some questions. So yeah, if you wanted to do that, we actually, our way became, we ask for your email and then we just email you the mortgage application. You fill it up online and it all goes into the system, secure and everything else. So it's sort of one way of doing it now is I'm finding more and more clients want to be texted. People say to me, you can text me, you can text me. So that's became the way of communicating. But obviously you can call us, you can email us. You can use the same number as well. I can send email. Maybe people text me, I'll send my email. But at the end of the day, I think if you're looking to do something, if we predicting the interest rates to maybe rise a little bit more and the prices of real estate to decrease a little bit more, I would say you definitely wanted to take the equity out right now. I mean, probably no better time to do this. If you wanted to wait out, it's up to you. If you're ready for, investments, whenever the time comes, you are fully prepared. So, but you got to act somehow, unless you're sitting on a lot of cash, then you're just ready to go and look for opportunities.
That's a great point. And to your point as well with the property analyzer, when you analyze a property, if you have the pay down and even historic growth is 5% in GTA for 40 years, it's still going to be doing well, even if over time,
Sure.
you're not going to be selling it in a month, you're going to hold on to that as wealth. I think that's a great point. So we'll make sure that anybody will can book a free call with you, either contact you on the cell or we'll get your calendar link as well, so they can book a call
Perfect.
with you if that's perfect as well. And yeah, really appreciate you jumping on and sharing your knowledge. One last thing as well, we actually had a question from someone before, and I thought I'd address it. They said they had their credit was not as good as it could be, and they had some other loans they had to take care of. What is something that someone can do to get back on track to buy a home or actually an investment? They already have a property right now.
I tell people all the time that most of the time you should have two credit cards. And I know some people can get, your like Capital One credit cards that are secure from your bank. You want to get something, two different, maybe a bank and maybe a Capital One or Home Trust. There are different kind of secure credit cards to reestablish your credit if you've gone through a consumer proposal or a bankruptcy. So those are key things to remember, because people say, well, I paid off and then I started. I'm like, no. You do it simultaneously. Restart your credit, pay down, then you're ready to go. And then if you have some debts, like we're going to take a look and see, what we can do when it comes to your debts. Everybody's very individual, so it's very, very hard to give exact advice to the
Right.
person.
100%. Yeah.
But if somebody is listening and thinking, oh my God, like I cannot do anything, quite often there are options. At least we'll advise you and prepare you and say, maybe you'll buy in 6 months, maybe in 18 months, but we will get you there. Like I very rarely, I don't see people buying something. I do see if they've gone on this path and they made a decision and they are having the income. They might have some challenges, with COVID, lost their job, whatever else. We will get you back on track. Like if you have the desire to work with us, we will be working with you and we'll get you to buy. So if you had a consumer proposal, if you had a bankruptcy, or if you're new to Canada, you don't have credit, there are lots and lots of programs for that. And also if you're self-employed, like there are lots of programs for self-employed where we can put you in. A client comes to you all the time, the bank said no, because, I write off my expenses. I don't declare as much a notice of assessments. Believe me, there are options. You can definitely own real estate.
Awesome. Do you think that if you have a summary of some of those programs that maybe for the area that anybody who signs up and gets a call with you, we can give them a copy of that or some information on that?
We can definitely send some information. We do have a lot of, info that we share with people, and
Right.
it all depends. Are you new to Canada? Because it's different with new to Canada. You don't need to have credit, right? If
Right.
you consumer proposal and you're bankrupt, you need to have reestablished credit. So we have different programs. Maybe it's easier for clients to reach out to us if somebody has that, and then we'll just share, because it is very individual approach and kind of it's really no fit that fits all. It's really tailored, so to speak. And then self-employed clients, again, it's different because some people, their income is structured in dividend, and some people, their income is, they're writing it off, and there are all kinds of things. So again, the self-employed clients, they look at the sheet and they say, oh my God, I don't qualify because, we have 20 different programs for self-employed client alone. The same thing for New to Canada. It's so many different programs. And the same thing for consumer proposal and bankruptcy. The lenders have their own different programs. So I kind of want to share this, like, here is the program, because people will read it and say, I don't qualify anymore.
Right.
But quite often we were able to, not only that, because we have been doing this for a long time, we have relationships with banks and lenders and trusts and all that. I could say, well, let me see if we can make an exception for you. Let me call a few lenders and see if we can make this work. So I would rather be more encouraging, reach out to us, because quite often we will find a solution to get this done for you versus I've read through this and I don't qualify anymore.
Yeah, like you said, it's a very holistic approach. You have to look at their goals and come up with a plan to help them accomplish that, and map that out for them, knowing their situation, their circumstance, whether they're new, self-employed, etc. So I think that's fantastic. Well, Sarah, I really appreciate your time. Thanks for jumping on, and we'll make sure that we can reach out to you and book that call.
Thank you so much. I really appreciate it, Sam. Thank you again. Thank you.
Thanks
Have
so
a beautiful
much.
day, everybody.
You too. Have a great day.
You too. Bye-bye.